Alright, welcome to Profit Path, where we help you become a better investor by knowing what happened, what's happening now, and what to watch out for next. Today is Friday, July. Stocks are staying near record highs while some sectors pull back. Oil prices are slipping again and AI leader Oracle cooled off after a historic spike. If you haven't yet, smash that subscribe button for crisp market updates every weekday. Let's start with oil because it continued to fall. It was down nearly 1% today. Brent crude slipped to about $66.07 per barrel. West Texas Intermediate, it's around $62.06. Both benchmarks are down more than 5% this week. Oil is giving back some of its recent gains driven by production cuts from OPEC+, and well as worries over tight supplies from key producers like Canada and Brazil. But now there are signs that maybe demand isn't all that great either. Case in point, the International Energy Agency said that global oil supply is growing faster than expected in 2025. That's mainly due to increased output from OPEC+, the group that includes Russia. They pumped out an extra 800,000 barrels per day in June. Now the agency expects global oil demand to rise by 2.2 million barrels per day this year, which is 200,000 less than what they predicted last month. The reason? Fading consumption in the US, China and India, the world's biggest oil importers. In fact, India's imports fell for a second straight month in June. Next, let's talk about Oracle. The enterprise software giant had one of its biggest days in over 2 decades. Shares jumped 36% after reporting a whopping $4.5 billion backlog in contracts. That's a new record. What's driving this surge? Well, demand for AI infrastructure, that's what Oracle calls it. It jumped 57%, accounting for 40% of total bookings. Look, companies are pouring tons of money into building and using AI tools right now. Oracle is helping them set up the databases and cloud systems to support all of this AI action. Now, Oracle stock has cooled off since then, though, falling about 5% from its highs. Some investors are probably taking profits after that huge run-up. Plus, analysts are starting to sound cautious. You see, the stock had already soared nearly 50% this year before the earnings report. So the jump in price came at a time when the company's valuation was stretched. Now, even though the future looks bright, the question is, how much of that future growth is already priced in? And now let's check in on the overall market mood. Well, US indices are staying near record highs. The Dow Jones Industrial Average is hovering just shy of its record high. Same with the S&P 500 and the Nasdaq. This optimism comes despite a mixed bag of earnings this week. You see, as long as companies top estimates, the market cheers. Earnings season is more than halfway done, and so far, 75% of S&P 500 companies have reported numbers. They beat estimates, lifting hopes for a soft landing and keeping rate cut hopes alive. The market is also riding high on AI momentum, with big banks like Goldman Sachs reiterating their bullish bets on the sector. And finally, there's this: inflation data won't derail rate cut hopes. We're talking about the core PCE index, the Fed's preferred measure of inflation. It rose 4.6% in May, a bit higher than expected, but still within the range that allows the Fed to keep cutting rates. So if you're wondering which sectors are looking the strongest, it's tech, semis, and innovation. Several stocks are flashing buy signals. Top gainers today include Tesla, Nvidia, Adobe, and more. In fact, some ETFs tied to tech, semis, and innovation are among the most bought by investors. Think RKK, SMH, the tech software sector. Now, what to watch out for next? Here are 3 things. First, upcoming inflation reports, CPI on Wednesday and PPI on Friday. These reports matter for Fed expectations. Will price pressures persist, or are they cooling off? Second, oil producers. How are they handling the supply surplus? Will they cut production to boost prices? Third, profit taking. What if the recent run-up in AI or cloud infrastructure stocks is cooling off? How will that affect tech-heavy indices? Take Oracle, for instance. A big part of its rally was due to bets on generative AI and cloud services. Now, if investors start pulling back from those bets, it could affect other tech giants like Salesforce, ServiceNow, and SAP. To wrap up, oil is falling, Oracle cooled after a massive rally, and markets are still near records, but everyone is watching inflation and supply risks. What do you think? Will the records hold or is a pullback coming? Drop your take below, and if you found this helpful, hit subscribe so you don't miss tomorrow's wrap-up on Profit Path. Until next time, see you.